Welcome. If you've just started exploring the stock market, you might have come across the terms trading and investing. While many people use these words interchangeably, they actually refer to two very different approaches to making money in the market. In this video, we'll break down what trading and investing really mean, how they differ, and which might be right for you. Let's get started by understanding the basics of each approach so you can make smarter decisions with your money. Investing is all about buying stocks or other assets and holding on to them for a long period, often years or even decades. Investors believe that strong companies will grow over time, and as the company grows, so does the value of their investment. For example, if you buy shares in a reputable company and hold them for 5, 10, or even 20 years, you're practicing investing. The main goal here is to build wealth steadily and securely over the long term. Trading, on the other hand, is all about making quick moves in the market. Traders buy and sell stocks within short periods, sometimes within days, hours, or even minutes. Instead of waiting for a company to grow over years, traders look for short-term price changes to make a profit. The main goal of trading is to take advantage of market fluctuations and earn quick returns. This approach requires a lot of attention and fast decision-making. One of the biggest differences between trading and investing is the time period involved. Investing is a long-term game, where you hold onto your assets for years, letting them grow slowly and steadily. Trading, however, is all about the short term. Traders might hold a stock for just a few minutes or days, always looking for the next opportunity to make a profit. Your choice depends on how much time you want to dedicate and your financial goals. Investors and traders focus on different things. Investors pay close attention to a company's fundamentals, like its earnings, management, and long-term growth potential. They want to know if the business will succeed in the future. Traders, on the other hand, focus on price charts, trends, and market movements. They use technical analysis to spot opportunities for quick gains. Understanding where to put your attention is key to success in either approach. Risk is another major difference. Investing is generally considered lower risk, especially if you hold quality stocks for a long time. The market might go up and down, but over the years, good companies tend to grow. Trading, however, comes with higher risk. Prices can swing wildly in the short term, and quick decisions can lead to big losses or gains. It's important to know your own risk tolerance before choosing your path. Investing requires patience. You need to wait for your investments to grow, sometimes for many years. Traders, on the other hand, need a lot of discipline and the ability to make fast decisions. They must stick to their strategies and not let emotions take over. Both approaches require a different mindset, so think about which style suits you best. Think of investing like planting a tree. You plant the seed, water it, and wait patiently for it to grow into something strong and valuable. It takes time, but the rewards can be great. This analogy helps you remember that investing is about long-term growth and nurturing your assets over time. Trading is more like buying and selling fruits in a busy market. You're constantly looking for the best deals, trying to buy low and sell high to make a profit. It's fast-paced and requires you to be alert and ready to act quickly. This analogy highlights the active and dynamic nature of trading. Oh, is trading better than investing or vice versa? The truth is, neither is better for everyone. It all depends on your personal goals, how much time you can dedicate, your knowledge of the market, and your comfort with risk. Some people prefer the steady approach of investing, while others enjoy the excitement of trading. The key is to choose what fits your lifestyle and financial objectives. For most beginners, starting with investing is often a safer way to learn about the stock market. By focusing on long-term growth and understanding how companies work, you can build a solid foundation. As you gain more experience, you might decide to try trading, but investing helps you get comfortable with the basics first. No matter which path you choose, protecting your capital is crucial. Making money is important, but it's even more important to avoid big losses. Always do your research, set limits, and never invest more than you can afford to lose. Smart risk management is the foundation of long-term success in the stock market. Let's quickly recap the main differences. Investing is long-term, focused on company growth and generally lower risk. Trading is short-term, focused on price movements and comes with higher risk. Both require different skills and mindsets. Understanding these differences will help you make better choices in your financial journey. Now that you know the basics, think about your own goals, risk tolerance, and how much time you can spend on the market. Whether you choose investing, trading, or a mix of both, the most important thing is to keep learning and stay disciplined. Your financial journey is unique, so choose the path that works best for you. In summary, trading and investing are two distinct ways to participate in the stock market. Each has its own advantages and challenges. By understanding the differences and knowing yourself, you can make smarter choices and work towards your financial goals. Remember, the journey to wealth is a marathon, not a sprint. Stay patient, stay informed, and protect your capital along the way.